Welcome back, folks. In this video, we'll cover drawn liquidity. I don't know if you know it yet, but drawn liquidity is the most important part of your trading journey. Once you know your drawn liquidity, everything else is the second thing. You can always adjust your position according to it. In this video, I'll give you simplest guide to find the correct drawn liquidity. First of all, what is drawn liquidity? The drawn liquidity refers to liquidity pool that algorithm is most likely to achieve next. The two main reasons why 50% of traders lose in trading are the incorrect market direction and incorrect targeted price. Both of these mistakes can be avoided just by choosing correct drawn liquidity. Liquidity resides above every high and low, which makes it confusing for beginners to spot correct drawn liquidity. But in this video, I'll give you a way to find correct drawn liquidity in simple steps. And at the end of explanation, I want you to remember that market is always running to liquidity from liquidity. Now, types of drawn liquidity. Types of drawn liquidity refers to possible variations of targeted price range when algorithm is targeting a certain price in a market direction. One way to find correct drawn liquidity is to use the logic of algorithm, which is to gather buy stops, which resides above the highs, and pair them up with sell stop, which resides below the lows. So we go from buy stops to sell stops, or to gather sell stops and pair them up with the buy stops. Either we go from highs to lows or lows to highs. Using above given two simple rules, you will get your correct drawn liquidity. But for this lecture, I'll give you something even more simple than that. You just need to remember this. Your drawn liquidity will reside at one of six types of liquidity formations: old high or old low, equal or relative equal highs, equal or relative equal lows, bearish front lines, and bullish front lines. The first column represents the buy side liquidity, while the second column represents the sell side liquidity. This means your drawn liquidity will always be one of these six, or they can be in the pairs. Now let's understand the drawn liquidity with the help of depictions. As you know, there are two types of drawn liquidity: buy side liquidity and sell side liquidity. The buy side liquidity resides above the highs, and sell side liquidity resides below the lows. In the case of old high, we gather the sell stops and pair them up with buy stops in a bullish market. In case of old low, we gather the buy stops and pair them up with sell stops below these lows. For the intraday or scalpers, the previous day's high and previous day lows are the easiest target. This can be a long-term target as well, because most of the time we are targeting the old high or old low. In our next type of drawn liquidity is equal highs or equal lows. These are very interesting type of drawn liquidity because you can use them for market maker models, consolidation, or scalps. I like to use them for scalps a lot because whenever we have these types of liquidity, market try to gather them up quickly and continue toward its direction. Then we have the trend lines. Trend lines are also very interesting. They tend to give us very aggressive and volatile price action. These can be used for the news reversals or jitter swings. Now let's look at the examples. The chart in front of you is GBP CAD daily chart. You can see we have taken the buy sell liquidity above these relative equal highs, and this high right here with this rejection had gathered all the buy stops that were residing right here. And we know that we gather the buy stops and pair them up with the sell stops, and sell stop resides below the lows right here, these equal lows. We are going from buy sell liquidity to sell side liquidity. I want you to recall we go from liquidity to liquidity. And in this case, we have taken the buy side liquidity and targeting the sell side liquidity. Now let's add some more lipstick and make it more professional analysis type of chart. You can see right here, the very first thing we have taken buy side, and now we are going to a sell side. We also have SMT right here. This is very strong confirmation that price wants to go lower. And we have this fair value gap or very lost confluence that confirms it all. You can see price closes below it with this wick, and then we target the lows after price closes above right here. Eventually, price goes down, giving us nice entries right here and then to this level. I actually sent this inside my free Telegram as well, calling out the price when it was right here, you can see, on December 26. I even said mark the prices now in order to get your attention. You will find the link to join in my bio. On to the next example. This is GBP USD 60-minute chart, 7 January 2025. You can see right here we have taken the buy sell liquidity right here, and we hit the higher time frame order block. Now we are gathering the buy stops above the highs and pairing them up with the sell stops below the lows. And we have actually a good trend line right here, remembering that we go from liquidity to liquidity. In this case, buy side to sell side. We are gathering the buy stops and pair them up with the sell stops. We call that we gather buy stops, pair them up with sell stop, or we gather sell stops and pair them up with the buy stops. Highs to lows and lows to highs. Here's some more lipstick. You can see we did the market structure shift right here. Then price came back inside this fair value gap, offered us a nice entry, another entry, and another entry on 15 minutes as well, and then it shoots aggressively toward this sell-side liquidity. You see how beautiful this price action is? This is all due to this frontline liquidity. Whenever we have that frontline liquidity, price will always deliver this type of price action. For last example, this is Euro USD 5-minute chart. I want you to remember we go from liquidity to liquidity, gathering the buy stops or sell stops and pairing them up with sell stops or buy stops. In this case, we have taken the sell side liquidity and we are targeting the buy side liquidity, which is form of relative equal highs. This high, and another high, white, this side. So these are relative equal highs. Relative equal highs also present very well opportunities, as you can see in this example as well. We are gathering the sell stops right here and pairing them up with the buy stops. Price gave us nice opportunity with this bullish order block, fair value gap below the opening price, and then we shoot higher toward the Tron liquidity, which is this buy sell liquidity. I actually executed this one and sent it inside my free Telegram as well. That's how easy market becomes once you understand the Tron liquidity. Tron liquidity actually opens your eyes to the beauty of price. Once you target the correct price ranges, then you see what actually market's been doing with the clarity of mind and focus. How do you get that mind and focus? With the practice. You need some practice. You need to backtest and practice these types of Tron liquidity, and once you get that, you are done. You are done for life. Believe me or not, but when you will get this, you will say that Mohsin was right. Market is beautiful. That's it for this video. Stay sharp, stay safe.